CPI data delivers a Bitcoin bounce, but is it enough to break out? That is the question on every trader's mind right now. And we are going to take a look at the charts and see if we can figure that out for ourselves. Hey, guys, it's Keith Allen. And yeah, we've seen a bit of a move. And yes, we did have some good CPI data come out this morning. And, I would say that, again, I'm no economist, but, based on what I'm hearing from the talking heads on CNBC, I think that the move is logical relative to the data. However, here's the however, this looks, well, eerily similar. Okay, let's call it what it is. It is exactly the game that I spelled out and I illustrated for you guys on Friday, on Monday. We talked about it yesterday, and it is literally playing out to the letter. So we're going to look at the charts, see what looks good, see what looks maybe not so organic, and see if we can figure out where we're going to go from here. I think the macro, has not changed here for Bitcoin. The macro fundamentals are strong. We have ETFs, we have post-halving. All of these things are in play. ETFs, by the way, didn't have a great day yesterday, mind you, 2 consecutive days down. And that speaks to something I've spoken of. I didn't write it here in the analysis, but I've spoken of this before, where I think that there's, that is one of the many disadvantages of investing in that ETF product. There are advantages, don't get me wrong, but the disadvantage, one of the many disadvantages to the ETF versus the underlying, is that you can't really take advantage of the volatility as nimble as you can when you're trading the market, when you're trading the underlying here spot. So that's just my take on it. So nonetheless, I do think that probably we will see some dip buying out of those ETFs. Like I said, they just don't get to do it as precisely as those of us trading the live order book can do with Bitcoin spot. Anyways, let's look at the charts. We'll talk about the move. We'll look at the candle chart. We'll look at the order book and see if we can make sense of everything that's happening here. Of course, let's go straight to the candle chart first, because this is where we have some impressive movement here. But again, we're working our way through the range. So looks like I actually have fire charts up. I'll go to the candle chart real quick here first. So the move yesterday, here's what we talked about. And we were in a couple of live streams yesterday discussing this. We have a situation where we were trying to hold above this 21-day moving average. And of course, this 2021 top at 69K has been an absolute, pardon the pun, freaking bear, right? We've just not been able to hold above it. We have dozens of attempts, most of them with wicks back down below, showing weakness. And of course, the rest is history. The point here being that just because we have a strong move here doesn't necessarily mean that, and that we're above it again, doesn't mean we're going to hold. Now, there are some good things, good signs here in this chart, I will say. And the most positive thing that I see in this chart is a solid bounce off of the 50-day moving average, coinciding with a new, albeit late, signal from trend precognition. So I'm not super excited about this signal by itself. However, the bounce from the 50-day moving average with no wick below, by the way, right? The wick below the 21 didn't like it. The wick below the 100 didn't like it. Solid at the 50. I like that. I also like the fact that the trend precognition A1 algo down here is signaling a reversion in momentum, giving us a signal, and also the MACD mirrors that, as the MACD also starting to show a shift in momentum on the daily chart. That doesn't impact the weekly time frame. That doesn't impact the monthly. It doesn't impact the 15-minute candle. We're talking daily time frame here. So keep that in mind. Now let's switch over to fire charts, where we can see some of the minutia of the move, and starting here on a wider version here on the monthly chart. And this is what I don't like. Late yesterday, I posted something about this incremental bid liquidity coming in, ladders coming in up from 58K and higher. And that was positive to see. And it obviously helped us secure support and drive this bounce. when we got the economic data this morning, I mean, the move was very abrupt, no doubt about it. And we'll see that here on a lower time frame in a second. But what I don't like, you see this liquidity that was here, and I'll highlight it for you a bit. Guess what? It came and it went. It's gone. So that's not especially an organic move, in my opinion. You don't see a massive market order right at that moment either. So we'll look at lower time frames and see if we can get some more granular detail on that move. But parallel to this, we have ask liquidity stacking here, right? And it's now moving lower. Now, the good news of this is when this does eventually work its way into the system here, when it does eventually get distributed out, that makes it easier to penetrate. But for now, this is a tough nut to crack, right? There's just too much up here for us to get through. 60 million right there at the 72K level. And look at what's below it, right? Another 30, another 18 and a half, and another 28 here. And so there's a lot going on right here, and that's going to be difficult to penetrate. Now, we do have scenarios where things tend to, how should I say, change without any notice. A roof pull, a rug pull. Look, here's a big rug pull. Nobody phoned in and said, hey, here comes a rug pull. It just happens. And that's the beauty of looking at order book data like this, data visualization tools like this, because we can see when it goes. We can see when it arrives. We can see when it disappears. And we can see the net effect of what happens, right? So what I'm looking for is a bigger concentration of bid liquidity above 65K to keep things on the positive here. Let's drill into some lower time frames and see if we can see any difference in this. But real quick, I just want to look at something that we were talking about on the candle chart yesterday, right? So my levels here that I'm watching, right? Obviously, we want to see things hold here at the 50-day moving average. Should things break down, and that level right now is just sub 66K. Should that break down, we have historical support here at the 58 to 60K range, and then this lower low. You do not want to see, if you're a bull, you don't want to see this lower low penetrated, okay? Because that sends us potentially into a different trajectory. The overall trend would stay intact. As we discussed yesterday, my invalidator on the trend is down here on the trend line. Currently, that's way down at 40K. Don't see much sentiment for that at the moment. But just know this trend line changes too, right? So if we over time were to grind down this way, we could be upwards, into the 44, 45K range by the time it gets there. So just things to consider, right? As potential targets if things break down. We don't want to see them break down, but if they do, we're going to take advantage of the opportunity because we're stacking a little bit of powder. So that we can buy if that opportunity presents themselves. So now back to the great gateway timeout there. That's timely for me, right? Let's see if we can get that to come back while we go a little bit further here in terms of what we've seen in the charts. Yesterday, I was showing you how I'm playing this in terms of buying dips, and I'm using the MTF mean reversion indicator to do that. And yeah, I closed all of these in profit today because I see so much overhead strength, and I don't think that personally we're at breakout time yet. So yes, I took these. They were all small orders. They combined to DCA into a decent position, and I take a small scalp. That's how I just turn capital while I'm waiting for things to happen, waiting for things to develop. Okay, so back over here, and you can see here on the weekly time frame again. I'm going to push the contrast here so that we can see what's happening here in the range. A little bit of bid liquidity coming in at 68K, it looks like, and that could be helpful. A little insulation up here could be helpful, right? Good to see this. However, to the upside, look, they're dropping the hammer down on you, right? So this is why I sold, seeing these moves happen, seeing them continue to try and suppress. Maybe these are the guardrails in place for Powell's discussion here coming up in about a little less than 2 hours from now. So maybe we hold in this range during Powell's press conference, and a dovish tone would obviously please the market and Fed watchers, and that may send things up. That may give us some roof pull opportunities potentially, and of course, a hawkish tone sends things back down here. So that's really what I'm looking at. It's liquidity that you're watching here, and it's going to take more liquidity coming into this range. We are seeing a little bit here move in, but the fact that we've seen so much of it move out is not especially comforting, right? So let's just kind of do this move right here. Oh, even filter out the low. We'll filter out the low and the high and see what's really the most important levels here. I'm taking out 75% of the low liquidity and the top 1% of high liquidity, high volume, I should say. And we can focus on the areas that are the strongest. Obviously, 65K, and that's only 12.5 million bucks, right? It's not a lot holding things up here, and this is my concern. A little bit here in the 68K level, as we said, 66, which is where that 50-day moving average is, right? This is what you want to see hold. Otherwise, we're in jeopardy of going down to this, 60, 65 and lose that. Then we got this to deal with. And this is very, very thin, which is why I think that if we lose this, if we don't see bids coming in above here, then we have a good chance of going after that lower low at 56.5, which again, nobody really wants to see at this time. Not a lot of sentiment for that move at the moment, but things to watch out for. And that's what I try and do for you guys. Give you things to watch for, help you understand the data so that you can make your own informed decisions. But I want you to be in tune to what the possibilities are. And at the moment, we don't see any real signs that this is shaping up to be a breakout move. Not just yet, it's not. Let's see this 65K level. Let's see that 12 million, 12.7 million. Let's see that turn into, I don't know, 50 million, 60 million, upwards of 100 million. I want to see it stacked, right? I want to see more and more akin to what we see here on the longer term chart, to see the kinds of the kind of volume that we tend to see when we have big moves in either direction. And it takes volume, right? This move right here was 111 million stacked. This was 96 and another 93 and another 50. This was over, well over 250 million stacked right here to get this move going. So we have 200 million overhead. We don't have squat down below. So it's as simple as that. I'm looking for this to be stronger and brighter than this before we see a real sustainable move to the upside. Absent of that, it takes a roof pull or a new block of bids coming into place to change the dynamic of the order book. Going to wrap it at that, guys. Just real quick, a quick housekeeping announcement, if you will. Super duper stoked at the support we're getting over on the Twitter or the X channel, if you will. The Material Indicators channel has surpassed the 30K mark this week. I quite honestly, we had some good coverage yesterday from Cointelegraph and got a bunch of posts from them, and I'm super, super appreciative of that. No doubt about it. But I haven't been able to find what actually went viral just yet, because there's a bunch of different posts. Either way, we're having a bit of a celebration, guys. So you want to take advantage of the tools that I'm showing you here, fire charts and trend precognition, MTF mean reversion, 30% off right now using promo code MI30K. It's a limited time offer. It's only for extended plans, so not for a monthly. Why do you want to save 30% why are you going to waste a 30% coupon on a cheap monthly subscription? Apply it to the longer plans, 3 months, 6 months, a year or more. And you got some real savings there to help arm you with the alpha you want to gain the edge you need to dominate this market. Going to wrap it right there. Keep the comments coming. Please keep sharing the channel, smash all the buttons. And if you haven't done so yet, tick that subscribe bell up above so that you don't miss any of these live streams. I do them every day, 5 days a week typically, and really don't know what time they're going to happen. I just kind of jam it into my schedule, and I'm going to wrap this one now because I got a conference call coming up in about 5 minutes. Talk to you later, guys. Make it a great day.